Hi guys, welcome to my YouTube channel. So today we're talking in great detail about technical indicators. And the big question is, can a newbie ditch technical analysis and still pull in some cash from binary options? We'll see. Also, we're going to show you how to bump up a $100 deposit. So please stick around right until the end of this video. Promise you it's going to be fun. And quick reminder about my Telegram channel. So there I post daily trading signals and all kinds of useful information which you can use right off the bat to start making money with me. So please like this video, subscribe to my channel, and also check out the description below because there you will find a link for registration on Pocket Option, which will give you a 50% deposit bonus for free. Alright, don't miss out and let's get started with the video. So I've got a $100 deposit and I'm jumping right in with a $50 deal. I'm using a couple of indicators right now, Williams and Arun. And these trend spotting bad boys give me lowdown on where things are heading and also let me take a sneak peek into the future. You can also see two moving averages on my chart. The green one is at 4. It gives me the gist of what's happening in the short run. The blue one is at 60 and that's all about the long game. When the green line slides past the blue one from below, it's time to get excited. It means the trend is shifting and the quotes are heading north, so I went ahead and opened a call option. The Arun indicators got my back on this too. Its blue line is screaming bull trend. It's overpowering the red one, which usually signals a trend going south. The Williams indicator is also chilling in the overbought zone, and as you see, my analysis paid off. The quote showed up like a rocket. And I'll be mixing it up today in today's trades, dabbling in different currency pairs. Right now I'm playing the Euro/Canadian dollar field. And it's time to wrap up our first deal of the day, and what do you know, it's netted me a nice $34 profit on my deposit. And let's hit the pause and dive into the meat of our video. First off, quick question. Do you really truly get those technical analysis indicators and what they're all about? And you'd be surprised, but some seasoned traders haven't quite cracked that nut. It's pretty obvious when I spot yet another meltdown of a comment about indicator strategies on the internet. Stepping back in time, technical analysis walked hand in hand with Japanese candlesticks into existence about 30 years back in the last century. Back in the day, indicators were worked out on paper by hand. They only became the cool kids on the block when trading decided to ditch the pen and go digital with trading terminals, much like the ones we're using now. And let's peek at the chart for a second. Just to clarify, today I'm on the hunt for those ultra-reliable deal signals only. And look at Williams right now. It's showing that it's stepping out of the overbought zone. That's definitely a signal. But Arun and the green moving average are betting on a rise in quotes, so I'm not about to roll that dice. Considering it's evening on my end and the market is snoozing with low trading volume, there is a risk the chart might not find enough steam to address the temporary blips on Williams before the expiration time kicks in. Anyway, back to our powwow. Though indicators have been in the game for a fair stretch of time, even some professional traders are still fishing for a full breakdown. A lot of newbies out there are either aiming too high with their expectations of indicators or are totally spooked out of using them. To break it down, an indicator is like a price chart that's been run through a specific formula. It could also be some extra trading info like the opening or closing price, the lowest or highest price tag, trading volume, stuff like that. The indicator values might show up as lines, bars, dots, or even funky geometric shapes on your chart. End of the day, this curve we get helps cut through the madness of quote movements. Tweaking the price can be a game changer in hunting down trading signals, But there are times when traders go for non-trading indicators to pack an extra punch of information. Things like how much profit you've made, how long till the session ends, when a candle closes, if there's some big ticket financial news coming up, and a whole lot more. The whole point of trading indicators is to wrap up historical price data in a neat little package on the chart. It just makes it easier for traders to figure out what's the market's next move. Think of using indicators as slapping on a pair of sunglasses. For rookies, quote dances can look like a fuzzy mass on half-shaped blob. And they glare at it totally lost. Rolling out technical analysis indicators is like popping on some specs. Suddenly, the chart's gibberish starts making a bit more sense. For example, you can hold off on jumping into a trade if the charts are near a total no-go zone for entry. We're talking stuff like overbought or oversold zones, support or resistance levels. Right now is not a shabby moment for a trade, and I'm gunning up for a $60 drop trade. The chart itself rang my alarm bells. After a solid upswing, its energy started flagging. On the A-Rune indicator, that red line has sneaked up to the 30 to 50 value corridor. All the while, Williams isn't flashing a U-turn, it's lying just about hinting at a downturn. But with the rest of the game, it waved a green flag for my trade opening. Okay, let's pick up our chit chat. With indicators, you can play the waiting game for a certain correction, or spot a shape or figure on the chart. All their number crunching boils down to basic math, basically. So adding, subtracting, multiplying, and dividing things like the closing or opening price, the highest and lowest price over a specific time slot. But let's get real, guys. Scrambling for the one magic indicator is straight up nonsense. We're juggling a finite load of variables here: price, time, sometimes trading volumes. That means the info for the indicator is purely secondhand and doesn't pack any fresh intel. It basically funnels the same chart data through a different lens. And okay, we'll circle back in a jiffy, but right now another trade bit the dust. My stash is up to $174.80. Let's crank up the stake to a cool $100. Time to take a gander at the dollar/Swiss franc duo. Candles here are hinting the action's dead as a dodo. Same story this side of town. More reckon it is. Guys, if your chart's full of scrawny candles for ages, that's your cue to steer the wheel. A market is bearing a shorter on plain mates, and the moves we're out to exploit are either a wall or throwing a curveball. I've kicked off a drop option with the euro/Canadian dollar pair. My indicators are making a racket saying it's high time to roll. Williams is limbo dancing. Rune's red line is hugging the runway. And we'll chat up on indicators later. Need to do a quick rain check on pair correlation. Okay, in Forex pair trading, there's a trick where you spot a correlation and slap trades on two pairs in one shot. But the United States dollar/Canadian dollar twin and I are failing to see a correlation, so it's back to the euro/CAD dance floor. Indicators on the market usually hang out in 3 clicks. We've got trendsetters, info sharers, and oscillators. Trendsetters scribble curves and squiggly lines over the chart that track and predict price trend. Most of my indicator pals today hang out with the trend setting bunch. Info sharers take a peek at juice from outside sources, all help out with some side stats. And finally, oscillators give us a lowdown on where we're sitting price-wise within a certain range. Okay, so our time's about to run out here. Let's hang tight and watch the trade wrap up. Eyes on the price, I mean the chart. Trade's done and dusted, and we're in the money. Now our stash is sitting pretty at $242. So depending on their game plan, each trader picks their favorite indicators from any group and uses them all together. You could ask 100 traders and every single one will have their own unique system and their personalized set of indicators. And before we go on, let's step it up and raise our game to a $200 stake. The most popular trend indicator, by the way, is the moving average. It smooths out the prices' ups and downs into average closing prices. When adding this tool to the chart, traders can choose their desired settings, and doing that is a breeze in a broker's trading room. I am now using two moving averages, one in blue and the other in green. For instance, I've set the green moving average parameter to 4, meaning every point of the line corresponds to the average closing price from the last 4 candlesticks on my chart. Most indicators come with optimal settings by default. Not all the indicators formulas are as simple as the moving average, but the important thing to remember is that they only use 4 candlestick prices: opening, closing, maximum, and minimum. And sometimes they take into account trading volume as well. About info indicators, traders often look to foreign exchange futures data on the Chicago exchange. They use this external source to make decisions, marking levels of postponed order accumulation or horizontal volumes of trades at certain price levels onto the chart. Okay, let's get back to trading. I've just opened a $200 drop deal on Australian dollar/yen. This time around, the green moving average crossed the blue one from the top downwards. That's a sign prices will take a dive. Williams is in the oversold zone, while the Arun indicator's red line is maxed out at 100. Let's take a peek at the Aussie and the US dollar pair and see if we spot any matchups. Their charts seem to be twins, so we might be looking at mirrored price actions here. But Arun's indicator is giving me a bit of a pause in this pair. The uptrend is in control here, marked by a blue line. If there are changes in its signals, I might go all in with the leftover cash. Folks, the Williams indicator is starting to shake things up a bit, trying to escape from the oversold zone while the chart's on the turn. So this goes to show why jumping the gun isn't the best idea. It's always smarter to play it cool and wait for the market to show its hand. And our Aussie dollar/yen is close to wrapping up. Let's sit tight, wait for it to close, and then grab the profit. Okay, our stash is now a hefty $388. I'm upping my game here with a $288 bet. Back on track with our topic. So, here's the deal. The Chicago exchange swallows up about 30% of all global currency trades. So, what's going on in Chi-Town is definitely something to keep tabs on, as it can shake up other markets. Sometimes info indicators dish out extra deets like news releases, any spreads that are widening, or even when the stock exchange rings off. These could mean incoming volatility spikes. Now we're talking big. Let's up the ante to a $300 bet. And a little heads up on oscillators. They let you know where the price stands in comparison to a particular range. Most time, it's the lowest or highest points that the indicators record that we're looking at. I've opened the position for the American and Canadian dollar pair to rise. I mainly rely on the chart for my signals. I'm biding my time expecting a correction after a lengthy fall in prices. The red arrow line signals a decrease in bearish trend influence and starts to decline. Interesting to see where this goes. More often than not, a sudden price movement is followed by a quick reversal. In the meantime, let's keep the conversation going. So oscillators tend to work well when the market moves sideways, but also tend to give you more false signals during long and significant trends. Speaking of which, Williams is a type of oscillator. Oscillators are often paired with trend indicators to identify trading entry points in certain strategies. Back to the chart now. The trade closed and the deposit has risen to $574. And I'm upping the ante to a $500 bet. Let's switch gears to the Euro-Canadian dollar pair. What can we see here, folks? The chart appears to closely align with the previous pair, United States dollar / Canadian dollar, and let's see if we can capitalize on this in trading. The trick is to find a pair whose market movement kicks off sooner. This would give us a valid trading hypothesis to then apply to another pair. And we're spotting a sharp upward movement in the Euro / Canadian dollar pair. Let's pivot to the United States dollar / Canadian dollar pair. And it seems the jump hasn't really happened here yet, but the Williams is beginning to emerge from oversold territory. So I'm predicting a cold rise in this pair as well. And so I've opened a trade for an increase. Okay, again about indicators. Investors use oscillators for averaging out a position, aiming to score some profit when the currency pair rolls back to its average. And the divergences of this indicator peaks from the pole chart are considered a jackpot signal. These kind of divergences are accurate predictors of the trend strength losing steam, sometimes marking the beginning of a reversal. And the price chart of any tradable asset, be it currency pairs or otherwise, yields the same price data that feed into the indicator formulas. This allows a skilled trader to spot trade opening signals on the fly just by eyeballing the quote chart, with no need for extra tools. And our strategy has proven right, and we've bumped up the deposit to just shy of $892. Yeah. Let's up the stake and try to repeat this success. Looks like the quote is dipping. Let's confirm the correlation. This pair still points towards a rise, but if I'm right about my theory, the trend should flip, and we might just catch the early wave of that shift. I've bucked the trend and opened a trade for a decrease, defying what the indicators show, but as my correlation theory has already netted a win, I'm counting on scoring again. I've joined the trade right at the crest of the rise. The odds are I'll catch the price as it starts to drop. Feeling a bit jittery here. The correlation confirmation is yet to show up. It's only now that Williams is coming out of the oversold zone, but remember, oscillators can give you false leads. And as I've already mentioned, indicators just transform chart data into another form. Therefore, experienced trader can spot signals even without these. But most traders do use indicators, and newbies definitely can go without them. We didn't see any major action, but we still bagged a profit, raising my deposit to $830. $1,333.80. All right, folks, that's all for now. We've grown our deposit 13-fold today. I hope you find the video worthwhile. If you did, go ahead and smash that like button, subscribe to the channel, and ring the bell so you don't miss out on any new fresh videos. If you're keen on making real money on binary options trade, join the link in my Telegram channel. You'll find the link down in the description below. Firstly, in Telegram, I will hook you up with a referral link. Registering using that link will give you a 50% bonus on pocket option. And secondly, you can boost your account with the daily trading signals that I post there, absolutely free of charge. All right, you guys, again, please like, subscribe, have a great day, and I will see you in the next one. Bye bye.